Hi, this is Mark with your update for the 13th of July. I thought it was about time we did a half-year review, really. I said in a post that you can find in the forum back in January when silver was at $29 an ounce that I thought it would be a good investment. I thought it would be a better investment than gold, and I explained about the ratios between gold and silver, etc., etc. And at one point this year, silver, since this January prediction, shall we say, was up 70%. It then plummeted and came back down again, and in recent weeks I have gone on ad nauseum about buying at this trend line. And yesterday I was telling you again that I had been buying silver, and all the way along this trend line we've been buying, and at the moment this current move is up, say, 20 or 25%. Which is great, and there are people saying, oh, thanks Mark, you've really helped. What you have to realise with precious metals, this is a long-term project, and this is, if you're going to keep it, you need to have a strong stomach, because it's quite easily that it will suddenly rocket back down to 30 again. My philosophy with it is you treat it as though you've put it in a cupboard, you lock it away, don't sit watching your Forex charts all day, every day, because it will go up and down like a yo-yo. But I explained all the reasons before. I explained why I was more interested in buying silver than gold. And in yesterday's update, I was showing you gold looked as though it was going to break its recent highs, all-time highs, and double top. And today it looks as though the candle is going to close outside. Now gold has only gone up 10% since my January musings. And that was the reason I explained why silver, they usually are hand in hand, and silver for me was the better option because it had more room to go. Now, if gold continues to rise, then we are playing on the theory that silver will continue to do so as well. The Aussie dollar, I have shown you many times that the Aussie dollar and gold usually are correlated. And the chart's not dissimilar, but once again, the Aussie dollar is coming up to this area here, and its all-time high is not far behind. And what I was saying at the beginning of the year there were three currencies I was interested in. I would be interested to hold money in Swiss because of the fact that it was a lot stronger than the US dollar, and I went into everything. I say it is explained in the article. Here is the dollar Swissy, and back in January, when I was talking in terms of it would be a good investment to put your money into the Swiss franc instead of dollars, that has similarly risen around 20% this year. Swissy now making new lows, all-time lows today, i.e. the dollar against the Swissy. The Bollinger Band has opened, and it looks like we're on for further falls here. Always the danger, of course, that the Swiss bank may start to intervene. But fundamentally to me now, as I had mentioned in the January predictions, was that the dollar is fundamentally flawed, as is the euro. There is more and more news dripping out. Bernanke today has basically opened the door for Q3 easing. What a surprise. We knew it was going to happen. It will happen because there's no way out of the current situation. The Eurozone, we have Friday, there are the results of the bank stress tests. Do not trade Forex on Friday because that could be worse than an FP day. The Italians today and the Greeks are all having a go. There's talk of the Irish needing a further bailout. This is serious trouble now for these major world currencies. The only difficulty is if you're not already in the Swiss franc, i.e. you're not holding Swiss francs, it's always difficult to buy when prices are at extremes. So really my best advice is if you were wanting to change your currency, perhaps savings, etc., into currencies like the Swissy or the CAD, particularly, and possibly the Aussie dollar, although as I mentioned at Christmas, I was more wary with the Aussie dollar. There is ongoing stories of a potential housing bubble in Australia. Then the difficulty at the moment is that we are at extremes, so you really need to look for pullbacks. Now, on to today's analysis. The chaos continues, really. As I said earlier, we have this scenario where Bernanke's all but admitted that Q3 easing is on its way, and Euroland are simply going to have to print more money. There's talk that the ECB today has been buying Spanish bonds and Italian bonds because nobody else wants them, and it's forcing up the price. and the chaos continues. Now, this is the monthly Aussie dollar yen, and I was showing you before, these areas were the areas of interest for me, and spookily, we've hit the top and the bottom of this move. Here on the daily, the main thing I think you can do at the moment is as I said to you, going back the last few weeks, just be in one trade at a time, especially anything euro related, and do not take anything euro related at all on Friday as mentioned. But the only way realistically you can look at it when we're bouncing around is perhaps to consider fibs. And here I have fibbed at this Aussie dollar yen. 8600, remember, was the big area before. It happens to be 61.8 the recent move, and we have these EMAs in the way. So there are multiple reasons here. Am I confident? Not really. This is the CAD. And once again, great in hindsight, spookily, it came up 61.8 to the pip of the recent move. We were looking in terms of the trend line here. It's coming down to a low here, but the Bollinger has opened. If it came back up here, 96.88, 90 area here, then I would be interested to short. Euro dollar. Look how the Bollinger Band's closed today on this one. I mean, this was a clue that last night, having done that this morning, that price would return back into the Bollinger. It's come down, it's sat on this 200 EMA, and it's failed to break it. On the weekly, what it did, if you watch your multiple time frames, it came down and touched to the pip this Bollinger Band, and never in a million years, fingers in the fire job, and moved back up. But what have we got up here? 4300, we have a 5-8 cross on a weekly chart. Going back to the daily, the same area is 61.8 of this recent move and the 34.55 EMAs. So that would be the area to be considering shorts. As I stressed earlier, be very, very wary with all things euro. Euro pound, can't really fib this. You start fibbing it, we're back up here around 8900, but that means it breaks the trend line and the EMA, so I'm going to leave that one. Euro yen, I fibbed recent low, recent high, and spookily the 50% fib is also in the area of this trend line. So 114 would be of interest to short. Once again, look how the Bollinger Bands, how important they were. Price yesterday closed way outside, and you know by now that if that happens, price nearly always returns to the Bollingers. This is the pound dollar. Pound dollar, I was telling you last night, this is a bullish pin bar reversal candle. Doesn't make particularly confident in view of all the chaos that's been going on. But the Bollinger has closed again. Price is moving up. We do look like we have a 5-8 cross coming up and potential stochastics. And we have MACD divergence. So the pound could race. The obvious area that cries out to me here is around 6200 for possible shorts. It's a previous trend line. There's EMAs here. It is above the fib. The difficulty with this one actually is where the heck do you fib this one from? Because maybe you go from here, then 61.8 is right in the middle. And it's a case really often of trying to get fibs to fit areas because you're trying to see what other traders all around the world are seeing. So if we take that area, then yeah, that could be the area. It is the main area of interest for me for possible shorts back down. Aussie dollar, I don't like this. I've just said the other day, it's just bouncing up and down. Look for clues for a counter trend bounce down. The Bollinger has opened though, so it could go. If it goes, you wait for the break and the close of the candle. But bear in mind it's unlikely, or it's likely to struggle at 1.1 area up above. Dollar yen finally had some action. We broke yesterday a major break of this recent low. If you fib this area, then that will take you back around 80 area, huge psychological level, etc. Look again how the Bollinger Band price was way outside the Bollinger. What's it done today? It's come back up to it before continuing its move back down. Okay, as I've said to you ad nauseum, it's not easy at the moment, very, very volatile, and it's not helped because of just all this news that's flying around on both sides of the Atlantic. Play it just one day at a time, one trade at a time. Catch you later.